What most people don't know is you can have 10 mortgages in your personal name. And so you can have up to 10, you and your spouse. So myself and Kirsten could buy 20 houses using our personal information, social security number, all that stuff. Now your debt to income has to match it. So you'd have to be a pretty heavy earner to be able to support 20 mortgages.
How do you find the will to fight back against a world that wants to keep you sedated, average, and stuck in place? Join us for the tools and strategies you need to create a life of abundance, discipline, and high achievement. This is the Tactical Empire with Jeff Smith.
Welcome to another episode of the Tactical Empire. I'm joined today by Sean Ryder. What's up, my man? How are you?
Not much. Ready to rock. Excited to be back on. Missed a week because me and my wife surprised our kids and went to Disney last weekend. Flew out on Saturday morning, got back on Tuesday. So I missed a recording. I think we just dropped one where it was just you solo. I got to go and listen to it because I think you always drop golden nuggets regardless if I'm on the episode or not. So I appreciate you taking it solo.
Well, I actually perform better when there's other people on the show. I don't like, it's hard to sit and bloviate for 15 minutes, 20 minutes by yourself. And so
bloviate. What are these SAT words? What the dude, Jeff, my SAT score was like a 1050. What the hell is bloviate? Did you just make that word up? It sounds like something a cow would do.
No, it's just to ramble on.
Bloviate. How do you spell that? Just kidding.
I have no idea. So
that's what Siri's for. She's always listening in. So
yep.
I get jealous when you have other guests on the show because I feel like you and I talk so much to record podcasts. Like you're super excited to talk to them, and I'm like, damn, like I need to bring some fire to get Jeff fired up on these podcasts.
Come on, man.
We're 50 episodes deep. No, nothing against you. I'm like, I got to bring it. These other people, the people that you bring on, drop freaking huge knowledge bombs. So I love all the guests that we've had on the show.
It's fun. It's fun to get to talk to people and understand different industries, different perspectives, different angles that they take on things. So I do, while I enjoy co-hosting with you immensely, I also think that like some of the guests that we bring on have fantastic information for people.
Absolutely.
So it's fun. It's fun.
Absolutely. So. They have different backgrounds, which means they interpret lessons differently, and then they're working on it. Like I think Anthony Hudson was a fantastic episode coming on talking about franchises. I think Sylvania Herod was a fantastic guest. The more people can talk to Sylvania, the better. But that kind of leads into today's topic. Was I was next door at the neighbor's house yesterday for a little get together and celebrating the husband just got a promotion. He works for a big time national company. He's the CIO, and then I think he's just got senior vice president status as well, and a couple other people on the team got elevated. So he had two of those people over to celebrate, and invited me and my family over to hang out and sitting there talking to some high achievers that have worked their way up, let's say the corporate ladder, so to speak, which I respect. It's something that I haven't done. I don't want to do it, but I mean the amount of work that they have to put in, the amount of knowledge they have to have, the amount of personal qualities they need to have other people view them as someone that can work at that high level in a huge organization like that is impressive to me. But we're sitting there talking and they get to talking about what I'm up to, and which can be hard to explain sometimes. Like, I run a men's mastermind group. I have bought some real estate. I like infinite banking, right? That's a good way to end a conversation.
No shit.
But it's always nice when someone takes an interest to what you're doing. And one of the gentlemen yesterday, not my neighbor, but the guy that he had over, again, high achiever, just got elevated up into the company that they're in. And he got really interested in the real estate side of what I'm doing. And he just simply asked the question that you and I get asked often, which was what I asked you years ago, was how do people actually buy more properties? Because his only experience was conventional buying properties for his own personal residence. And now when he moved out of residence, he rented the previous one before, but due to life circumstances, he's liquidating those two. But he's about to move out of the one he's in and he wants to keep that. But how does he go about buying more than a property every year or two? And we've talked about that on other episodes, but this episode is going to be dedicated to that, whether it's private money, hard money, or asset-backed lending. Let's start with asset-backed lending. Can you go ahead and explain what asset-backed lending is, what the two predominant types are, and what they're for, who they're for, and why it allows you to move much faster in the real estate acquisition game?
Sure. What you're talking about is DSCR loans, which are debt service coverage ratio loans, meaning debt service coverage ratio. And that's a formula that the banks use to underwrite a deal, meaning can this asset on its own, should it bring in income, be able to cover the debt service to it? Meaning, like, okay, you've got $100,000 house. It's effectively a little tiny package commercial loan, like a business loan is what it is essentially. And so they're going to say that $100,000 house, PITI, but principal, interest, taxes, and insurance is going to be $1,000. What will it rent for? It will rent for $1,200 a month. In that scenario, that's a coverage ratio of 1.2. Do you understand? Because it's $1,000 is the debt, $1,200 is the income, and that's a 1.2 ratio, which the banks use a scale somewhere, whether they'll lend on 1.2 or 1.3, somewhere around there is usually where they're at on it. So you want your deals to be able to kick off that sort of ratio, if it will. But what that does in turn is it makes these loans are actually no doc or few document loans. So there's full document loans, which is if you're going to go get a mortgage using your social security number and you're going to assume the debt. What most people don't know is you can have 10 mortgages in your personal name. And so you can have up to 10, you and your spouse. So myself and Kirsten could buy 20 houses using our personal information, social security number, all that stuff. Now your debt to income has to match it. So you'd have to be a pretty heavy earner to be able to support 20 mortgages where they're saying, okay, your debt hasn't risen above your income, because they don't count the rent as your income for 2 years.
Good clarification.
So that's where people get stuck, though. They come into the real estate game and they're like, okay, I'm going to buy these all in my personal name because that's all I know. And you get 5 houses and now your debt to income is way out of whack and you can't buy a 6th one because they're like, well, you've got fucking $7,500 worth of mortgages and you make $80,000 and like that doesn't work. So this is when we introduce DSCR loans, because 2 things. If you're an entrepreneur, you don't paper well as far as like documentation unless you have a W-2 job. The people that have corporate jobs that make less money than us actually are better on paper to lend to. So like it's crazy how out of whack the banking system is, because you could go up against, I mean, a person that makes $50,000 could get lendability far exceeding someone that may have their own business that takes home $200,000. And so that's where it kind of gets out of whack. So not to get totally off topic, because I know we want to stay narrow here. We're trying to get houses, right? So all you have to understand about the debt service ratio is you have to look at the asset and say, will this cover the debt on it? And that's really all that matters. And another thing that people don't understand is that 1 to 4 units is considered a single family home. So if you're going out to get a single family home, you can get them on obviously single family homes, duplexes, triplexes, and quad. On the single family homes that you go and you get a loan for, you don't need to use your social security number or anything like that. You can get as many as you want of these loans if the asset will support it. It's like going out and buying a business, if you will, and the business is like going to make a certain amount of money. So if you look at the house, like it's got to make enough money to pay for itself plus kick you off 20% profit, then you're essentially at a 1.2 ratio and you can go get as much lending as you want, because the banks care about the asset and what it's going to produce. They don't really care about your financial backing. And so what you need in that situation, you do need something. You need access to capital, just access to it. So you have to have capital reserves, and you have to have a credit score that's not totally fucking abysmal. And so, but there's ways to work around that too. But the better credit score you have, the better rates you're going to get, the better you're going to appear. So when I go to get these DSCR loans to buy more real estate, all they want from me is a good credit score and me to be able to exhibit the fact that I have access to capital. And that can be any form. That can be a line of credit. That can be your life insurance policies, your infinite banking system. It can be your savings account. It could be the ability to show access to capital in any way.
Love it. And that's kind of the answer I gave him. I said, you're going to get tapped out with your lendability because of your debt and income. And so we have to switch over to asset-backed lending. We have to have the property be able to be sufficient enough for someone to give you money. And that's where the DSCR loan comes in. Bank statement loans, again, low or no doc loan, looking at bank statements, make sure large capital reserves are there. And so again, this is one, faster because it requires less paperwork. Two, you're not going to get tapped out from the number of them that you're acquiring as long as you are able, as long as the property is able to get the financing for itself. And that's how people get assets way faster. So that was, something new. So his next question was, where do I find these people? And it was like, yeah, you just start asking around. Once you know what you're looking for, there's other people that have access to people that have it. So we have people in our network, and we recommend them inside of the inner circle. I got someone locally, but the more you talk about these things with people, the more you're going to find people who understand these things and they know other people. So you want someone that can work smoothly, work quickly, that understands what you're trying to do. Now, what can there be some hiccups with these, right? Especially right now with appraisals being up or down and kind of like a crapshoot. Is that the biggest hiccup, is when you get a property under contract and the appraisal comes in lower? Or what are the potential hiccups with using asset-backed lending? Now, the traditional personal finance people will say the hiccup is the interest rate is going to be slightly higher, but we don't care about that. So what are the actual hiccups that we can run into trying to get DSCR bank statement loans?
Well, and that's a good point to put out to people that don't understand these. You're going to pay 1%, roughly 1% more interest on the things. So if you go out and you use your social security number and you're going to get a 6% interest rate, I'm going to go get DSCR loans and I'm going to pay somewhere between like 7.25 usually. So just to full transparency there. Where are they going to go get them? They're going to go get them from, I mean, there's a variety of sources. There's nationwide brokerages that do these type of loans. And the hiccups that you're going to run into are, really, there are none, except their ability to underwrite the deal and provide them the level of security that they want. So what you see change in these transactions is cash to close. That's all that changes usually. So if I come to Sean and I bring him a deal and Sean's like, well, I could do this deal for sure. And you're a lender, you're a DSCR lender in this scenario. And you say, I'm going to get this done. It'll probably be an 80-20 ratio. And I'm preparing to bring 20% to close on the down payment. The only thing that changes leading up to what it is, like maybe the appraisal comes in low, something like that. You're like, well, we're going to have to do 75-25. You're going to have to bring 25 to close. That is it. I mean, that truly, because all you're trying to do is mitigate the bank's risk. So maybe they go 70-30, which you may be able to pallet, or you may say, fuck this, that's not a deal then if I've got to bring that much cash. And that's it. I mean, that's truly the difference. Like, well, you told me you could close this at 80-20. Well, the market changed, things changed, and now it's 70-30 because we have to protect our own ass. Because the banks and the lenders are not in the, you have to understand who you're dealing with too. And they're not in the business of owning real estate. So the last thing they want is the keys back, because they don't fucking want that property at all. And so ultimately it's a relationship that you're trying to build, but like the hiccups that you're going to run into are just simply cash to close, or somebody will lose interest in lending to you. So like if you run up too big of a liability, meaning like let's say I've got $10 million worth of properties through one lender, right? They might want to back off and not lend you anymore at that point in order to, because they may feel like they have too much risk associated with one entity or one person or one operator. So you can run into issues like that at smaller numbers, meaning like if you go to a credit union and you go gangbusters and you buy a couple $1 million worth of real estate, they may pull your line and say, we're not doing any more with you because we've already got $5 million worth of real estate out on you. And so you're going to have to go find another bank. So you just go out and find another lender that's doing the same thing. The interesting thing about these loans, though, is they're brokered on the back end through a variety of sources. So this is not like Wells Fargo or something like that. I mean, these could be private people. There are a lot of times family offices and stuff like that. So they'll go buy bundles of mortgages. Like the Smith family may own a ton of, they may just be pipelined in with some of these lenders, and privately we will lend at this particular rate and we'll carry the paper on these real estate deals. So a lot of times it's family offices, it's private lenders on the back end. It's a co-op of guys, like you threw in money, I threw in money, and we started a lending business, and that's what we're doing. And we're just selling paper and shuttling it around. I hope that helps. I mean, that's a common question. And honestly, this is one of the mindset things that holds people back from jumping ship and doing what they truly want to do often. I had this conversation last week with a guy who's very established, has 8 figures worth of net worth and he's 45, and he is saying the same thing as far as like, what do I do without my W-2 income? Like, how do I get loans? How do I get lending? Like, he's worried about a bunch of stuff. You have to understand that if you're going to take the jump and be self-employed or whatever you're going to do, your lending world is going to get noticeably different. So you go out and get cars, you go out and get other stuff that you're trying to leverage the bank's lendability, and it does change, but it doesn't mean that there's no access to money out there. I've got loans on trucks, RVs, a million houses, and on paper I don't have any money. And so so I'm not going conventional routes to get lending. Now my credit score is sky high. And like I talked about, like I pay my bills so that I have a very high credit score, which makes me attractive to a lot of these lenders. And so there's just like a secondary market that people don't understand. And like, that's where you get all your loans, and life doesn't slow down at all. And so
it speeds up once you open the door to it. And that's the point. We didn't fall down the rabbit hole of traditional personal finance or the Rave Damseys of the world, but I simply said, this is how you move faster. We have all the time in the world and we have no time at all. So from a financial wealth building standpoint, you need to learn this, which is why he asked a fantastic question. And ladies and gentlemen, we get asked this question all the time, which is why I brought it up today. It doesn't matter if you're just out of college or you've been working in a corporate industry. And this gentleman actually handles $1 billion division of this company. So he's seen big numbers before, but he's never been exposed to how do I acquire real estate in my own micro economy, in my own house. So ladies and gentlemen, these are the awesome, great questions that have an easy answer to them. You just have to be exposed to the answer for the first time and then actually go and take that step of getting the right person that has access to the product. So the answer to how do I buy more real estate? How do I buy real estate faster? How can I increase my lendability is you're lending on the asset with a DSCR or bank statement loan. We're not lending based on your proven ability to pay debt via your W-2 income. End of answer. Jeff, send the people out.
Well, I hope this helps. I mean, your financial IQ is going to be your limiter. So I hope this opens some doors for some people and maybe helps you take the leap to do something on your own. It's not as scary as you think. Life goes on. So you'll figure it out is the answer for about everything. So guys, if you have questions about this stuff, send us some messages. If you need connections on lenders, stuff like that, I'm happy to help. Sean knows people, I know people, but don't sit back and not do anything, and go make things happen. Have a great week.